of your life is a turning point. Hence, your life is a circle. And stock market was my way out of this circle. My name is Niraj Vasani. What I do is I analyze the stock market, I dissect it, and day in and day out, I analyze it. And I'm here to give you a talk on my affair with the stock market. I call it an affair because it has been an unbreakable bond for more than 15 years. And I have been through all emotions. You name it, I have been through it. Greed, lust, satisfaction, happiness, love. On certain days, stock market makes you feel like you're the king of the world. In fact, which you will be. And on some days, it nags you to the very core, which makes you question the very reason why you started loving it in the first place. But I have seen stock market transition from screen trading, what was going on before on the floor, to screen trading, what is going on now. And stock market has seen me go from a young student to a professional that I am now. I say it's a two-way street. Many people have this notion that stock market is one way you invest money. But people who have invested or people who have not yet, let me tell you, it's a two-way street. It responds to you. Stock market actually responds to you, and stock market responds differently to different people. And when you're in the stock market, what happens is every day becomes a challenge, every day your relation develops. And what exactly stock market is in layman terms is you literally own a piece of the company. That is why it is called share market. So when you buy a stock, you literally own a piece of that company. And if that stock price goes up, you make profit. And if it goes down, you make loss. It is as simple as that. It is 0 or 1. My engineering friends will understand it better. It's Boolean logic, digital logic. It is either 0 or it is 1. It is as simple as this. If the price goes up, you are in green, that is positive, and if it goes down, you are in red. But humans have this tendency to take a very simple product, complicate the hell out of it. And now you see stock market jargons, and you have a perception of the stock market like people wearing blazers, having economic times, and you feel like it's some different world. They have complicated the hell out of it. In fact, Peter Lynch, who is the guru of the stock market, has given a statement saying that all the math that you need in the stock market can be learned within 4th grade. That's all the math you need. And coming to the next topic, which is the misconceptions. Throughout my journey, what happened was I was enthusiastic about the stock market, but when I spoke to people, there were many misconceptions about it. And whenever I spoke to a new set of people, I got a new set of misconceptions. And I felt that my main reason to give this talk here is to clear that misconception and also give you one strategy. This is for people who have already invested, to give you that strategy which has helped me over the years, and it has tested time very well. And this is the PPT that I have made for the myths of the market. Now, what they say about PPT is like your kid. No matter how ugly it is, you will still love it because it is yours. So this is my PPT. And the first misconception, which is a generalized misconception. Why I'm saying a generalized misconception is there are individual misconceptions and there are generalized misconceptions. So the first misconception is that stock market is a gamble and hence it is risky, which is a very, very common misconception. Even crossing the road is a gamble. Crossing the road is also risky. But we as Indians have a very good risk appetite. I think all of us are guilty of this, especially here in Mumbai. You see how you cross the road. Just analyze how you cross the road. We don't wait for the entire road to be empty. Never. Never. We cross the road in installments. You say this part of the road is free, you cross it. And you're right there standing like a king. You're not bothered. In fact, you direct the vehicles. You go from here, you go from here. And They say it is a gamble. Let me tell you, gamble is a zero-sum game. It means if I lose money, you gain money. At the end of it, there is no creation of wealth. But in stock market, you actually generate wealth. Stock market is the biggest wealth creator, which is actually the second misconception, that it is a money burner. You might have heard from your friends, you might have read in the book that I have lost all my money in the stock market. It's a very, very common saying, especially in some movies. In fact, it is exactly the opposite. You take any time frame, any country, and you compare stock market returns with any other investment, be it gold, be it real estate, or be it any other investment. Stock market has defeated other investments 2 times over. Now, when I clear these misconceptions, and they are individual misconceptions. Individual misconception is this: it requires a lot of time. So when I'm out there convincing people that stock market is a great idea, people tell me that if I enter the stock market, I'm having a full-time job, I'm a student, and their misconception is that people who are in the market devote a lot of time to it, and people who are in the market are buried in the screen, they need a lot of analysis. Let me tell you, we perform more than 100 trades a week, 100 trades. The time we take Monday to Friday is less than 5 minutes combined. Everything is on autopilot. With the help of technology, stock market is as simple as click of a button. You want to buy a stock, just one button on your app. Even better, you can make it automated. And about time, there is a saying, you can always earn more money, but you can never earn extra time. And if I say you consider a week, which is 100%, so your week is 100%, your weekend contributes to almost 30% of your entire week. Now you just think, what are you doing over the weekend? I have many phrases like, I need rest, I need the weekend off, I have burnout. But if you analyze, you are technically wasting 30% of your time over the weekend. And people say that we need the weekend off. It is fine. But people who are out there earning millions of dollars don't waste a single minute. So about time, I have seen people waste the weekends, and Monday to Friday, they cramp it up. And once I tell my friends that it does not require that much of time, they're like, okay, we will devote this much time, but then what about this? You need a lot of money. Now, many people are scared to enter the market because of money. They think stock market is for people who have extra money, and they think stock market is for someone who have more money to spare, or they can burn that money. Now, there are stocks which are available for 1 rupee or less than 1 rupee. And there are stocks which are greater than 50,000. So I'm telling you, if you start with 10 rupees, you can still buy 10 shares. Or even you can buy 100 shares of a certain company. Now you compare it with any other investment. You go out with 10 rupees to buy real estate here in Mumbai, or you go to buy gold, you just compare it. And my suggestion is, as a kid, I used to keep 2 wallets. One was a spending wallet and one was a earning wallet. What is it? Is whenever I take my wallet out to give someone some cash, say tea, 7 rupees, I used to tax myself. If the tea was 7, I used to make it 10, and I used to put 3 rupees in my other wallet. And every time I took my wallet out, I had to tax myself and put my money into another wallet. What happened was, I started developing a corpus, and with that money, I started investing in the market. Now, if you also can do a certain lifestyle change, or if you can save even 10, 20, 30 bucks a day, you can start investing in the market right away. I remember in my college time, there were stocks which I have bought 11, 12, 13 rupees per stock. Today they are higher 3 digits. So it's all about, you save so much, on the spot you can buy shares worth that much, which no other tool can offer you. And this is a very, very individual misconception that stock market is something to fear. In fact, when you say that you're in the stock market, half the people go away from you. It is that fear. But my take on the stock market is like adopting a puppy. You adopt a puppy, you don't know what the future is. You know that you love it and you hope that it loves you back. And throughout, you hope that you develop a good relation. And as it grows, you both develop a bond. Same thing with the stock market, it's a two-way street. You develop a bond. And when that puppy becomes a ferocious dog, it looks ferocious to others, but it gives you a sense of security because you know that dog. And that is what stock market is. If it looks ferocious to you, it gives a sense of ease to someone who is owning it. So, but sometimes dogs do bite their owners. That is one off, but that tells a lot about the owner. And you need to be an expert, which is one more misconception. And when I started, I had zero knowledge about the stock market. I just wanted to be in it. I wanted to experience the thrill. And when I tell people, you just invest a little bit, because until you invest a bit, you will never learn it. But they tell me, Niraj, I will first watch a few movies, I will read few books, let me study it. So my question is, if you have watched more than 4 Bruce Lee movies, do you know karate? It's no. By watching movies, you don't get it. And it is similar to swimming. When you want to learn swimming, you don't waste months sitting at home reading about it. The depth of water, surface tension, temperature. You start with shallow waters. Gradually, you go into the deep waters. Stock market is just like that. You can read about it how much you want. It will not give you any knowledge unless you are a part of it. And then you can go into deeper waters. And we, over a period of 15 to 16 years, we have tried out hundreds of strategies. We have burned our fingers, we have made lots of money, and we have done so many iterations. But there is one strategy which actually I want to share with you, which is the main idea today, that has helped me get a lot of money. And people who are already in the market, but you're not finding a direction, you can try this strategy out and give me part of your money. Now, this is the whole strategy. So, this is better for the people who have already invested a bit. The first step is to select your basket of top 20 stocks. But if you have no idea which are the best stocks, you can go online, you can type best 20 stocks in India, you will get a list. But if you want to make your own list, which I strongly suggest, you can make your own list of 20 stocks. When I was a college kid, I saw people going to cinemas, coffee shops, and I was like, people are blindly spending 500,000 bucks on the tickets. I thought that was ridiculous. Then the price of the popcorn, higher than the ticket, and people are spending it. And I was like, can I be a part of the profit? Yes, you buy the stock. If you see PVR, when I was a college kid, it just started. And the returns from the time it started till now, it is in 4 digits percentage-wise. Then you see Cafe Coffee Day, you see Starbucks. Everything is listed in the market. And I was like, at ground level, I knew how they were performing. And this is one thing I would like to share with you, that you guys know the pulse of the market very well, because you guys are the consumers. You know how a brand is performing. As a kid, I always knew Britannia and Dabba would always outperform because I used to see the demand for it. So even though they were not in the top 20, I included them in my basket. So if you see some brands, ground level, they are performing extremely well, you can include them. Now the second step is, say you have collected 10,000. You divide them into 10 equal buckets. So you have 10 buckets of 1,000 rupees each. So the first step, what you have done, is actually called fundamental analysis. Fundamental analysis is something where you pick out which stocks to buy, and technical analysis is something that when do you buy them. So fundamental analysis is which stock to buy, and technical analysis is when do you buy them. So what you have performed in the first step is actually fundamental analysis. You know your companies are good, you know your companies are robust, and you have divided your 10,000 into 10 equal buckets, And the third step is on every trading day, that is Monday to Friday, pick out the stock that has lost the most. That is the top loser of the day. Out of your 20, buy the stock which has lost the most. How much do you need to buy? One bucket, which is 1,000 rupees. The reason is market reacts very sharply to negative news, or even if the news is not positive, it is considered negative. So over the years, we have seen that when the company goes down a lot, a good company, it is always an overreaction, and next day it always bounces back because then the market understands it overreacted. And if you do this for 10 days, that means you have spent 10,000 on 10 different days buying good companies at better prices. And at the end of the 10th day, just analyze that you have put, say, 10,000 and how much you have earned in those 10 days. It might be 10,100, 10,002, 11,000, and then you repeat this process. Now, you can have your own variations to this, but this is the skeleton that helped us a lot. And this strategy, we call it loser's winner, because on that day, we pick out the top loser, not because it is a loser, it is a good company because you have done the fundamental analysis. And then by taking the top loser, you are doing the technical analysis. And to all of you, I don't know whether it is the good time to invest or bad time to invest, but this is the only time we have. And as most of you are the young crowd, I would request you start right away because the journey is going to be very exciting. And I know all of you have come here with that one intention to take that one idea home that you can start applying. And I leave you with this thought that at the end of the day, finding money is always better than what you're looking for. Thank you.